Is the Brisbane housing market in one of Australia's biggest property bubbles? It's skyrocketed in the last 4 years, up 64% since COVID hit our shores. But is that gone too far, and is it now significantly overvalued? In this video, I'm going to deep dive into the Brisbane property market. I've spent countless hours on research, unpacking exactly what is going on in Brisbane to help you understand whether you should buy, sell, or get out of there as quickly as you can. And guess what, everyone? The answer surprised me. Let's get into it. So let's start with what is going on in Brisbane right now. You can see in the month of August, Brisbane house prices rose 1.1%, 2.9% over the quarter, and 15% over the past year. If you're a Brisbaneite, you're probably feeling a little bit wealthy because this is what you call a property boom. And guess what? It's been happening for 4 years in a row. You've just made matzo dollars, hundreds of thousands of dollars. In fact, looking at this number, $352,000, up 66% in the last 4 years, courtesy of CoreLogic, this wonderful chart, and much of the research that we're going to go through here. More specifically, right now, days on market, houses in Brisbane are selling very quickly, at 20 days, barely changed in a year. Vendors are barely discounting at all. Whatever they list their price at, that's what they're getting. They're getting about a 2.8% discount, a very, very small discount, one of the smallest discounts in Australia. That suggests that vendors, those selling their homes, they're the ones deciding how much they're selling at. Pretty good conditions to be a seller in Brisbane. But you have a disparity between different types of dwellings in Brisbane. You have the expensive dwellings, they're not doing as well as they once were, with growth rates coming back down. That's really affordability kicking in. People can't borrow enough. House prices have gone up so much in the last 4 years, and they're like, oh man, I really want this nice house. I'd like that bluey house over there. That looks nice for me, but I can't afford it. I can't get the loan for it, and I can't afford it anymore, and that's why top-end values are coming down a little bit. Meanwhile, the affordable stuff, all the people that are out there being like, I want the bluey house, can't afford it, let's go get the Peppa Pig one. That's kind of the one that they're going and getting. So they're moving down the affordability spectrum and buying cheaper homes. This is a national story. It's not just Brisbane. It is a function of higher interest rates, but it's in the data. You can see it in the last quarter. The lowest quartile homes, the cheapest homes in Brisbane, up nearly 6%. When you annualize that, that's nearly 25% growth over the course of a year. Absolute mind-boggling that the property's value could go up that fast, that quickly. Meanwhile, top quarter homes up 3%, also pretty strong, but there is a near doubling in the rate of price growth, depending on whether you're looking at expensive, really nice homes, or looking at cheaper homes in Brisbane. This is what Eliza Owen from CoreLogic in the AFR had to say. It's fair to say that affordability constraints are starting to put pressure on the higher end of the market, even in those booming cities. She's talking about Brisbane when she's talking about booming city. Brisbane clearly in boomtown at the moment. But will this last? One of the big questions to look at here is look at current stock level. Are listings coming up? Are vendors being like, hey, I've just hit the lottery, 350 grand in the last couple of years. Man, I could never earn that much money. Is it time to get out of here, cash in my earnings, move out somewhere else? Is that what's going on? We'll be able to see that in the data. Let's check it out. Here you have CoreLogic's modeled sales and buying. Here, that's what's going to happen this spring. You can see that they're predicting that the Brisbane market will come into balance this spring. This chart's a little bit old because we're a few weeks into spring now. And you can see this in the data, current new listings. How many people are selling their home at the moment? Brisbane this year, in this dark blue line, you can see it is above their 5-year average and way, way higher than last year. 12.1% higher than last year and nearly 7% higher than their 5-year average. That means there's more choice for buyers on the ground this spring. They can go and choose to buy more homes because more homes are on the market. People are selling their homes. But you look at the total number of homes that are available to buy, that's well down on average. That's down 25% on its 5-year average. So what gives? It just means that the homes that are coming to the market, they're being sold pretty quickly, and on average, compared to a 5-year period, it takes a lot longer to sell your home in Brisbane because we're in a boom right now there, and that means houses are transacting really quickly. All the new listings are getting taken up. So the total number of homes that are available to buy, that is well below the 5-year average. You can see that here, another chart here, down 29% on its 5-year average. This one's a little bit old. Now you've got it at 25%, so that reflects the latest month's data. And we've got here new housing approvals. So when you want a measurement of demand and supply to work out how your market's doing, obviously demand is really strong. It's in boomtown. But one of the offsetting factors is, are new homes coming to the market? Are more people selling? And more importantly, is there a lot of construction happening, and is the market going to be pummeled with housing stock that drives down house prices? In fact, that ain't going to happen in Queensland, not going to happen in Brisbane. You can see it here. The number of dwelling approvals are down a lot. These are construction starts. It's looking pretty dire. It's coming down nearly 20% on its average. So it's in boomtown and there's no new homes coming for sale. That's a pretty positive picture for housing demand, for housing investors. When there's a lot of demand, no supply, that promotes price growth, and it's a big reason why property prices have shot up in Queensland and Brisbane. When you break down the spread here, it does present a little bit of golden information as to what you should look at. You can see housing approvals are down in Queensland, but unit approvals in the last few years, they've had a pretty marked increase, up at 25,000 in Queensland. Much of this is dominated by Brisbane as well. So you can see a big increase in the number of unit constructions that are going to hit the market. I haven't actually seen this. A little personal anecdote of mine is I sold a unit in Brisbane just a few months ago, and there was a wave of people trying to buy it. I didn't even have an open home. It didn't even get to an open market, and there were 11 offers on that one-bedroom apartment that there were plenty of in the area. People were fighting over it, and it sold for about 10-15% more than I thought it would get, and about 20% higher than the last recorded sale in the building about a year ago. So it suggests that unit demand is really strong despite this increase in construction in units that's there. So, a little bit of conflicting information there, an anecdotal story of getting really strong demand in the apartment sector, and you could see it in the price growth, but the future data suggests that there's a lot of apartments that are going to start coming online, and that might cap in that price growth in the apartment market. So it probably points out where you might want to look in Brisbane specifically, a little bit different to the rest of the country where apartment approvals are down, but in Queensland it looks like it's going up. When assessing a housing market, you also want to see pressure in the rental market. What is going on in Brisbane's rental market? And this provides some concerns. It's all been rosy and positive for property investors so far. You're probably listening to this and being like, I own property in Brisbane, and everything I'm saying is, I'm sitting on a gold mine, I'm doing really well, a lot of demand, not much supply, I'm a winner. But one of the offsetting factors is the rental market. Brisbane price growth is being driven by rental increases a lot with strong demand for rents. You can see this in the 12-month change, up 6% in the last year, up 11% per year over the past 3 years. Really strong figures here. But in the last quarter, zero. No more rent growth. Rents have stopped growing completely in Brisbane. This is a big shift. It used to go woo, now it's going woo. So that gives you a little bit of an insight into the rental market in Brisbane, a little bit of a concern factor. Vacancy rates up at 1.1%, still very low, but starting to increase. And you could see this in gross rental yields. I love this statistic. Maybe it's the finance nerd in me, the econ nerd in me, but look at this Brisbane chart. It's a little bit messy because all of the charts, all of the states are in here, but looking at it specifically, you can see Brisbane, the yield is down to 3.7%. And it's come down a lot from above 4 just a few months ago or a year or two ago. And its historical yield is around 4.5 to 5%. And it's been trending down to 3.7%. The same yield in Melbourne. Your compensation for risk, which is what I consider yield, how much of a return are you getting for the risk you're taking at 3.7%? It's pretty ugly. It's the lowest it's been as well. So that is an offsetting factor because it suggests that affordability is really tough now. And you see this in all of the macro affordability data here. I've got some data from CoreLogic. This is nationwide, but it does apply to Brisbane as well. The dwelling value to income ratio, really high, well above average. The percentage of income to service a new mortgage, way above average. This one's bonkers at the moment with high interest rates, up above 50%. Years to save, a 20% deposit, really high, 10 years. And the percentage of income to pay rent, much higher than it has been before. So Brisbane has its yields being compressed, and that yield compression will continue. House prices are continuing to rise right now, and rents have stopped growing. They might even go backwards. So that Brisbane rental yield could come down to about 3.5%, which isn't really much compensation for a property investor to go and invest. You're getting mortgage rates at 6, 6.5%, 7%, whatever it is you're paying, and you have yields at 3.7, you're going to be in a very, very large negative loss every property investment you have in Brisbane now, and that's going to push away that investment demand over time. Okay, so let's look towards the future. So that's the current makeup of the Brisbane property market, but what is going on with its economy and its job market in the years ahead? And will this property price boom continue? This will all be a function of how the economy performs. If the economy performs really well, if it is doing well, then there's going to be sustained housing demand and that market will continue to rise. If on the flip side, unemployment starts shooting up, people start losing their jobs, people in Brisbane are going to be like, time to retire, off to Noosa I go, I'm going to go live at the beach, I'm not working anymore, stuff getting myself a new job, I just lost mine. If that happens, Brisbane's going to look completely different. It has been an economic boom that has driven this improvement in housing values. So is it going to continue? Let's deep dive. I've got this data from the CommSec State of States that compares Queensland to the rest of Australia, and boy, Queensland is on fire. When I look at this, I look at a state that is outperforming the rest of the country by a distance. Economic growth at 4.1% versus Australia 1.5%. It's on fire. It is leading the charge for economic growth. It is making up for the laggards in New South Wales and Victoria. Queenslanders are out there. They're going in, putting in a shift and doing the work for Australia. Retail spending down a bit, 0.4%. Mortgage balances are getting bigger and bigger with all these price rises. You kind of expect people to be able to spend less at the shops, but they're still growing. It's because equipment investment is up. Some of this you'd expect to see in certain industries, in energy, in mining, in other industries that Australia are really, really good at. Queensland is doing really, really well. There's so much investment going in there that's creating jobs. It is not people spending money at cafes or buying dresses or fancy haircuts or the dentist. Hello, RBA, if you're listening. It is not Queenslanders doing that. That is not what's happening. It's businesses investing and creating jobs, and employment growth is on fire at 4.6%. This is amazing. Looking at all of this, construction work up at 4.4%. That's pretty healthy. You want to see construction work in and around the Australian average. That's positive because all of this good economic activity isn't just happening in the housing sector. People aren't building more homes, and that's feeding into more jobs. That ain't happening. So for a property person, that's pretty positive. Population growth rates 2.6%, soaring above the Australian average as well. You'd expect that. Strong economy brings in people, brings in jobs, brings in higher population growth figures. And then there's a couple more indicators here with dwelling starts, housing construction being pretty low. Now, when it comes to the employment market, this is really what you want to pay a close attention to. Magnifying glass, and I've done that for you. An unemployment rate at 4.1%, pretty good. Job ads down only 8% over the course of the year versus the Australian average down 20%. Job ads are a lead indicator of what is going on in the job market. Are businesses going out there putting ads on seek.com and being like, hey people, I need some staff. Hey Queenslanders, come work for me. You are seeing that still happen. Job ads are very elevated relative to the past and only down 8% over the course of the year, down about 20% in Australia. Vacancy drop, so the number of jobs available, the drop in the vacancies, every state has dropped in its vacancies because the labour market is cooling, the jobs market is cooling, but Queensland has had the smallest drop in the number of vacancies. They can't fill the jobs that they have. It's near the highest ever that they've had since COVID. And all of these charts just show Queensland doing really, really well on its job market relative to usual. And employment growth, the key one, how many jobs are Queenslanders getting, how many jobs are they creating? 4.2%, much faster than the rest of Australia. And then you look at their participation rate. Queenslanders feel so good. They're like, hang on, can I go get a job? I want to participate. That's what the participation rate and the changes measure. In other states like Tasmania, South Australia, in other areas, you see the participation rate going down. People aren't necessarily losing their jobs, but they're like, I don't really want to participate. It's a bit hard. I applied for a job. was painful. I didn't get a response. I don't want to go and do it. In Queensland, they're like, can I please apply for a job? I want to be in the market. I want to go and participate. It's higher than ever. That is a beautiful, beautiful statistic. And if I'm a Queenslander, if I'm living there, I'm not, I'm a New South Welshman, so complete opposite. But if I was looking at this, I'd be celebrating. I'd be like, wow, we're doing so well. Whoever your government is doing a good job when it comes to the economy. That's what this all says. And this chart, I want everyone to pay attention to. If you missed through, you skip this video, come to this chart and take a look, because it tells you how housing finance is doing across every single state and compares them against each other, and breaks it down between owner, occupier and investor. So you can see New South Wales, Victoria, Queensland, WA, South Australia. Let's look at Queensland in particular here. Owner-occupier finance is up 30% in the last 18 months or so. That is a very big increase, 29.34 specifically, increase in owner-occupier demand. It is owner-occupiers driving price growth. Investor demand up nearly 69%, so again, really, really high, but much, much lower than South Australia and WA. And importantly, you have a big increase in owner-occupier finance. So it means that a lot of Queenslanders living there are the ones trying to buy homes. Yes, they're competing with investors who are like, I want to buy a home too. What am I saying here? Everyone wants to buy a home in Queensland. That's kind of what the data's saying. Investors, owner-occupiers, can I have a piece? That's what the story's been over the last few years, and the housing finance data suggests it. This I look at as a positive for Queensland as well. Very, very healthy. So let's summarize. Is the Queensland housing market, the Brisbane housing market, is it in bubble territory? Or is there a second wind of gains to come? When I look at this is my high-level summary. The downsides are rental yields are scary. 3.7%, I'm not being compensated for risk pretty well. It looks a little bit like Sydney and Melbourne. It's at 3% in Sydney, and Brisbane's starting to get there. It's like, oh, do I really want to invest my money there? This yield isn't that pretty. Rental price growth has stopped. That is concerning a little bit, but you know, if interest rates come down, that's probably okay, because the net expense income situation that you have, if rents don't go up but costs come down, your interest expense, then your net position improves regardless. So that might be okay. Supply levels are beginning to rise in terms of people selling, but there's no new supply coming in. And importantly, the economy is the best in the country, or WA. It is doing really, really well. It is the engine room of the East Coast for sure. It's real. This ain't no housing bubble. It's not even close to a housing bubble. A housing bubble is when it's inflated by investors. It's overvalued for sure. In fact, I don't know how to work out exactly what fair valuation is. That is really, really hard. But I do know when there's demand outstripping supply, prices do rise. That will continue for a period of time. And it's real. There's a real argument to say that Queensland property prices, Brisbane property prices, could easily overtake Melbourne house prices and be the second most expensive capital, and justifiably so. Its economy deserves it. It deserves its position here. It shows it. It's clear. The data is obvious. The economy is so well. The jobs market is really, really good. There's a lot going for it. So my conclusion is it definitely ain't no bubble. And in fact, Brisbane definitely isn't a sell right now. It could even be a buy in many locations if you pick the right suburb. So summary is Brisbane doing really well, not a housing bubble. Despite its rapid price growth, I think it might have more room to run, and any interest rate cuts could fuel the next wave of Brisbane house price growth. So if you're looking to invest in property, I'd put Brisbane on the list of areas to look at. If you enjoyed this video, this deep dive, let me know in the comments if there's any other state you'd want me to look at. I've done Brisbane, I've done Melbourne, I've done Sydney. Do you want me to take a look at Perth, Adelaide? You let me know which state to look at. Drop it in the comments below and I'll present that information. And if you think I've missed anything important about Brisbane, also let me know so I can feed it into our next data video for you. And if you've enjoyed this video, hit that subscribe button, hit that like button, and support me on my journey to keep producing content about property, economics, and lending for you all.